Trading is closed on May 4th, 2023. As always, we'll do our disclaimer, go over our calls, and make some predictions. It's my trading plan for May 5th, 2023. Remember, I can be wrong. Trade at your own risk. Look for the pattern with the early high, which is this. Tomorrow should also have the early high. Futures were way down when I made the call. I said the market would have to gap under this low if the decline was to continue. That's what happened. I also said if we gapped up, bears were in trouble. Well, the futures were way down when I made the call. They actually recovered completely and went positive in the pre-market, so the rally crowd had a chance, but by the time we opened, we did get the gap down. That's what bears needed. Bears need to gap under the low, which is what they did. During the day, MEJT said higher prices were coming. The buy signal hasn't played out. The targets to overtake this high, 40.8113. If we don't gap down, rules call for that to print. It's hard to get too bullish in this environment, but I will point out that we gapped down, hit lower lows, closed over all the lows. If we don't gap and take these lows out early, that's a bullish pattern. Note these green lines, they're prior FOMC prices from months ago. Note how they provided support on this drop. Well, the employment report comes out tomorrow. It tends to be a market mover, and I don't like predicting responses to big reports like that. I just can't do it with any degree of accuracy. If the response is negative, the odds are we're going to gap and undercut these lows, because when this bullish pattern, normally a bullish pattern, doesn't work, should be a straight line down, which we haven't seen. And if the response is positive, we'll probably gap up and take out the high, which is what this pattern normally does. But of course, by the time the report comes out and you get the move, it's going to be too late. So tomorrow's pattern has the early high. Doesn't mean you won't gap down. The jobs report comes out before tomorrow's open. Typically leads to a big move. I just can't predict with a sufficient degree of accuracy. Today's pattern should have given either a rally into the close or a straight line drop. Neither happened, and this should be rectified by gapping sharply at tomorrow's open. We have a higher MEJT target. We have the volatility index over its upper Bollinger Band, and the possible wave count. I didn't show that. I will in just a minute. They all argue for the gap being up, but that's not a lock, and any rally here is counter-trend until much lower targets are seen. This isn't exactly an ABC down. It misses by a small amount. If that's C, that's A. It's really slightly off, but it might be close enough. So there is a chance we get a move up tomorrow, starting by gapping up, but I'm not going to predict what happens when the jobs report comes out. There are lots of other patterns which I find far more predictable in response to such reports. So tomorrow has the early high. Look for a sharp move at the open, probably gapping and taking out the extreme of today's trade. There is a higher target, but if we gap down, of course, that doesn't have to print tomorrow. And that's today's call.